Absolutely. Here's a couple stats that are, some of them are well known and some of them aren't, but it used to be a rule of thumb when you bought a house that 25% of your income would go to paying your housing costs. Then it drifted to 30%. Well, now it's 44%. And in some cities in the US, it's over 90%, which is nuts. But this is dual income too. So everybody is basically using their income to pay for their house. Now, depending on your work line of work, your income might be different than your total compensation, right? And so people might be using your income metrics, but not your total compensation metrics. But still, if it's 44%, housing is now the least affordable it's ever been in the US. And because during the great financial crisis, all the millennials, there's a ton of household formation that was delayed that is still pent up. And now if you're 30, if you're 25 to 40 and you haven't bought a house, you've missed out on a wealth gap, because whoever did own a house, to simplify it yet again, if they bought a $500,000 house, it might be worth $800,000 now. And so that person is sitting on a equity nest egg, and the person who was renting missed out completely. And so in terms of that gap, there's other assets too. Like autos are completely unaffordable. I heard this auto economist, and he had a lot of great stats. And he was saying that half the people can't afford a monthly payment over $400. Since 2019, used car prices are up 45%, and your lease payments are three times higher. And so there's a lot of these types of imbalances, if you will, that are going to take a while to get worked out. But for right now, the wealth gap got much, much bigger in the last number of years. And the difference between inflation and affordability is an important point, because
a lot of people get this wrong. A lot of happy commentators,
they conflate them all the time. And so what you have is these commentators go, well, inflation's only up 4% this year, or only up 3% this year. The Fed's doing great, and so that's good for the consumer. Yeah, but if I couldn't afford a house last year, I'm not going to be able to afford one this year. It jumps so high in value. Housing is still at all-time unaffordability levels, even though inflation's come down. So it's one of those situations that people think will correct itself. I think as long as people have jobs, it's going to take a very long time to correct itself. On top of that, the baby boomers, the windfall they had as they were getting ready to retire or just retire from for many of them, their primary asset, their house, to go up so much in value. And then they sold it and moved to a much less expensive state. Like they sold it and moved to Texas. And so they moved from New York to Texas, and now their cost of living's down. They took the money out, and those boomers are spending a lot of money. And their net worth since the start of COVID is up by something like $18.5 trillion. And, you can't take it with you. So they're spending it. They're taking their extended families on trips. There's a lot of things that have changed for them. And on their savings, they're now earning 5% instead of nothing. So their wealth has exploded in just the last number of years. What's important in all this is the government, with all the fiscal spending and the handouts and the different things that were going on, the consumer is in good shape for the most part. And that's in part why the government is not, because the government wrote trillions and trillions of checks and gave them to people. And now the government's trying to fund all those trillions and trillions of dollars that they gave away. Meantime, initially, all the credit data was greatly improved for consumers, and now it's starting to work its way back. And it's the lower quintiles that are really feeling the stress. You know, if you and even the people who reached when they bought a house. You know, if you bought your house and you reached for it just a little bit, and most people when they buy a house, they have an idea of what their monthly costs or quarterly costs will be. Can I afford to own that house? And since they moved into it, they might have a nest egg that is difficult to access without refinancing. But they're almost house poor, some people, because their taxes went up, their insurance costs went up, their maintenance costs went up, their utilities went up. They've been squeezed on every level. And all of that sort of dynamic, there's a lot of imbalances right now in the system. But in general, it's the real risk is that right now is at the federal level, because they transferred wealth to the consumer, bailing out the consumer, and the consumer has been living off those excess savings that they've been calling it for the last number of years.